You've got energy prices moving higher for the first time in 4 days. Crude oil specifically closing above $71 a barrel after the dollar declined, and China reported net crude imports increased by 18% in August. So we're looking at about a 2.6% gain in crude oil for today's session.
All right, for more on what's driving the price of oil and a look at the supply side of the equation, I am joined by energy guru Tom Petrie. Tom founded well-known energy advisor at Petrie Parkman 20 years ago. He is now a vice chairman of Bank of America-Merrill Lynch, which bought the firm from him, and he joins us from Denver. Tom, let me ask you, first of all, we have been seeing these large fields found, 3 billion barrels in the Gulf, and now we're looking at Anadarko's recent find of a field of a little over 1 billion barrels off the coast of Africa. It would seem that there's so much supply coming online that the price action in oil doesn't make sense, although obviously it's a long time until they get it all out of the ground.
Well, that's part of it. It will be a long time. These are discoveries that'll come on midway through the next decade. The other factor that we're dealing with here is that there's more at work. The weakness or strength of the dollar has a real bearing, as Carol just suggested, on the daily movements in the price of oil. And certainly the growing confidence in China's ability to get its economic recovery underway creates the expectation that there'll be demand growth there to absorb that new supply. Over the next 2 decades, the growth in Chinese demand could well be 9 million barrels a day. When you combine that with the other BRIC countries, Russia, India, and China, all put together, you end up, and Brazil, you end up with about almost 20 million barrels a day, or as much consumption as the U.S. has today.
Wow. So, Tom, net to me, while it may not be a concern today or a problem today, that long-term supply then does become an issue.
It will, and the one other thing I didn't mention is the embedded decline in the installed base. That, as near as we can tell, is almost 4 million barrels per day per year. So if you fast forward to 2015, we lose about from that alone we lose about 20 million barrels a day that has to be made up with these new discoveries. So it's good news. I'm not saying that at all, but that term I used the last time we talked, practical peak oil, that still captures the idea. I'm not a peak oil person who just says, peak oil no matter what. But the combination of constrained supply in the U.S. to the remaining resource base and the control of oil by the OPEC countries puts us in a position where I think supply-demand will stay in remarkably good balance as we look out over the next decade.
In that case, what do you think of the price here? I mean, at $71.50 a barrel, a lot of people are saying it's well overpriced. Obviously, though, the dollar plays into this.
Well, the dollar plays into it. I subscribe to the notion it's somewhat overpriced. On fundamentals alone, I could argue somewhere between 55 and 65 is probably a more appropriate range to be thinking. I think the dollar weakness and the concerns about future dollar weakness is contributing to that extra $5 or $6 a barrel that we have in the price today.
Hey, Tom, over the last few weeks and certainly the last couple of months, we've, really kind of made note of some of the discoveries, BP, Anadarko, Tullow Oil. In terms of what we've seen, what do you think is the most significant contribution or might have the most significant contribution to supply and the most quickly contribution, if you will, or the fastest contribution to supply?
Well, probably the quickest will be Brazil, because they've been at it for a while. The deep waters of Brazil are the biggest in magnitude in terms of the new plays, but then it would be West Africa and then probably the Gulf of Mexico in order of size.
Let me ask you about, we hear so much from the Obama administration about the health care changes that they want and the bank regulatory policy changes that they want. What about the energy policy from this administration? Has that fallen by the wayside?
By no means. Very good question, Matt. Basically, we heard the president in his address this morning on climate change at the UN reiterate that he expects that a democratically controlled Congress is going to make changes in the tax code that I think will be significant and negative in terms of the cash flow generation and therefore the self-financing by the companies that are developing new supplies. This will be particularly noteworthy in the U.S., and I think it will cut against our any improvement in our trade balance, because we will see a sharper decline in existing production exacerbated by those tax changes if they come to pass. And I think this is a Congress that's going to want to raise revenue for other projects, so they may come to pass.
All right. Hey, Tom, thanks very much for joining us. Tom Petrie there, Vice Chairman of Bank of America-Merrill Lynch.